by definition, bond is simply a loan which is given to the issuer, यानी कि जो borrower है of the money by a bond holder, a loan which is given to the issuer by a bond holder or in a lender, whereby the terms of interest payment and redemption dates are predetermined. इसको मैं और सिंपल करूं अगर हिंदी में, तो अब एक लोन एक लेंडर ने जिसके पास कैश सरप्लस था, उसने एक बोरोअर को यानी जो कैश शॉर्टफॉल था उसको एक थोड़ा पैसा दिया, जिसके एवरेज में वो उसको इंटरेस्ट पेमेंट करेगा यानी ब्याज देगा एट रेगुलर इंटरवल्स, और एक पर्टिकुलर डे में उसका प्रिंसिपल वापस करेगा, विच हम रिडेम्पशन डेट या मेच्योरिटी डेट बोलते हैं. So this loan is actually, when put into a legal document or a registered document, it is known as a bond. So when you purchase a bond, you are lending money to an entity who is known as an issuer. And on this entire structure of lending money and receiving interest, you have some predetermined conditions which says कि ये डेट पे ये आपका बॉन्ड मेच्योर होगा यानी एक्सपायर होगा, इस डेट में आपको प्रिंसिपल मिलेगा, और ये आपका रेट ऑफ इंटरेस्ट होगा जिसे हम कूपन पेमेंट बोलते हैं. एंड वी हैव अ पीरियोडिसिटी ऑफ पेमेंट व्हिच इज ईदर कैन बी अ मंथली और अ क्वार्टरली और अ सेमी एनुअल. दिस एंटायर स्ट्रक्चर इज नोन एज अ बॉन्ड. ठीक है, इस थोड़ा सा मिसकंसेप्शन या थोड़ा सा लोगों पे क्वेरीज होता है कि बॉन्ड्स और डिबेंचर्स में क्या फर्क होता है. सो देयर इज नो मच डिफरेंस as such between bonds and debentures. एक basic definition में हम समझ सकते हैं कि when bonds are securities which are mostly issued by governments, and when bonds are issued by companies or corporates, they are called as debentures. And bonds which are non-convertible in nature are called as non-convertible debentures, and specifically वो आपका debt instrument है, किसी और characteristic में convert नहीं होगा. Those are NCDs by nature. So let's understand the बेसिक्स ऑफ और जो हमने बोला कि क्या प्री डिटरमाइंड कंडीशंस होती हैं बॉन्ड में, वो हमारे राइट हैंड साइड ऑफ द प्रेजेंटेशन लिखा हुआ है कि सबसे पहला बोरोअर यानी इशूअर इज अ कंपनी और अ कॉर्पोरेट और अ गवर्नमेंट हु इज बोरोइंग मनी, वो हो गया बोरोअर. अब सिंस दे बोरो मनी इन अ लार्ज चंक, the chunk has to be divisible in a format that even a small investor can also purchase and a large investor can also purchase. So the minimum denomination of a bond is known as a face value of a bond, which can be as low as 1,000 rupee or a 1 lakh rupee, 10 lakh rupees bond, and even in some case 1 crore rupees as a minimum unit or a minimum denomination of a bond is a face value of a bond. Then as we discussed, there are conditions of interest payment. So bond may definitely interest payment रहेगा. That interest payment is in the format of a percentage and it is known as a coupon. It is very similar to an FD. जहाँ आप बैंक में FD करने जाते हो तो आपको बैंक बोलता है ओके ठीक है, आपने 1 साल के लिए FD किया तो 5.5% मिलेगा, 2 साल के लिए किया तो 6% मिलेगा. In a similar format. So the coupon rate is the interest income which the borrower यानी कि bond issuer will pay to the investor on a regular frequency. That is the interest rate or a coupon rate of a bond. Frequency can be monthly, quarterly, annual, or cumulative. One more important parameter of a bond or a covenant of a bond we can understand is the credit rating. Credit rating is a very important factor when you are investing into a bond. क्रेडिट रेटिंग का डेफिनेशन ऐसा होता है कि it's done by a independent evaluator whose job is to determine the credit worthiness of the debt security issued by a borrower. The objective of the rating agency is to evaluate the financial situation of the borrower and their capacity to service or repay the financial obligations. यानी कि there should be some third party evaluator who checks the credit worthiness. यानी जो borrower है वो अगर आप 100 crore का issuance कर रहा है तो the borrower has the capacity कि वो आपको principal बाद में terms and conditions के हिसाब से वापस कर पाएगा, आपको regular interest payment frequency उसकी बराबर रहेगी. तो ये जो कंडीशंस जो उसका बिजनेस प्लान है या फाइनेंशियल्स है, इसको कोई थर्ड पार्टी इवैल्यूएट करता है और फिर उसको एक रेटिंग देता है. तो क्रेडिट रेटिंग एजेंसी एक्ट्स एज अ वी कैन से कैटलिस्ट फॉर चैनलाइजिंग इन्वेस्टमेंट्स एंड डेट इंस्ट्रूमेंट्स बाय इनेबलिंग both individual as well as institutional investors in making the informed investment decision. So ये बेसिक हो गया क्रेडिट रेटिंग एजेंसी का काम। इसमें जो हाईएस्ट क्रेडिट रेटिंग होती है, द टॉप क्रेडिट रेटिंग इज नोन एज ट्रिपल ए, एंड देन यू मूव डाउन द लेडर, वन नॉच बिलो इज डबल ए प्लस, देन डबल ए माइनस, सिंगल ए, till the level of triple B. We call it an investment grade instrument. Any rating below triple B, it's known as non-investment grade or a very high risk instrument, because then you are risking your principal also. So it is always said that you have to be invested into investment grade instruments, which is triple B and above. As we mentioned, one of the important parameters is you have invested money, when will your principal will come back? That is the maturity date of a bond or a redemption date of a bond. So if you've invested into a 5-year instrument, that after 5 years the money will be credited back to your account, or if you've invested into 3-year instrument, the money will come back to your bank account at the end of the 3rd year or maturity date. Last most important thing, investor कौन होता है? तो anybody who's investing into the bond can be an investor. It can be an institution, it can be a mutual fund, it can be an insurance company, it can be an individual investor, it can be a corporate, treasuries. Anybody investing into a bond who is eligible to invest into a bond become an investor. So these are the basics, definition and characteristics of a bond.
Harit, if we want to check whether who can invest in a bond, the same can be viewed in some document.
So both a bond का एक बाइबल होता है जिसको बोलते हैं information memorandum. When it is issued, you have an information memorandum which covers all the related documents related to a bond. It is slightly a thicker document with more than sometimes even 100, 125 pages and 150 pages, which covers everything, which includes the investor category who can invest.
The list of eligible investors, you mean?
Yes. Along with this, if you want to refer to a smaller piece of document, the synopsis of a bond is called as a term sheet. A term sheet is always a part of an information memorandum, or in a normal term, some say prospectus of a bond. So term sheet has all the basic details of a particular bond, all the relevant covenants and features of a bond, along with the list of eligible investors. What is the difference between bonds and debt mutual funds? Now, I believe that you guys are all from the investment fraternity. You have been investing into the markets, whether it's an equity market or a mutual fund, via the mutual fund through equity or debt funds. So I'll not be explaining what a debt fund is or a debt mutual fund, but I'll definitely try and compare it with the direct bond investments. So when you invest into a direct bond or an NCD, you receive a defined coupon rate. यानी कि जो भी coupon rate है वो आपको 8% का bond है, 10% का bond है, 9% का bond है, you get your defined rate of return. And if you have invested into a bond where there is a possibility of a capital gain, or where after holding a certain period of time you get capital appreciation of a price of a bond, you get capital gains as well. Whereas when you invest into a mutual fund, the returns are linked to NAV. So you invest into a particular NAV and you exit at a particular NAV. And this NAV is subject to market conditions. It depends upon various factors why your NAV can affect. Though you get returns in fixed income via mutual funds also, but there are subjective chances you will make less return, or sometimes you make higher returns depending upon the performance of the market. You don't have a definite answer. This is what I'll gonna make. I'll invest 100 rupees. 10 rupees is the coupon rate, so I'll get 10 rupees every year depending upon my investment. So that definition is not defined. Safety bonds are secured as well as unsecured. Bonds are backed by assets. Via mutual funds, again, it depends whether the mutual fund has invested into a secured bond or an unsecured bond. It depends upon the underlying security. As an individual investor, if you're investing into a direct bond, you can define your call whether you want to take a secured investment, secured bond investment, or an unsecured bond investment. Lock-in. So bonds are tradable instruments listed on stock exchanges. They are easily tradable, so there is no lock-in and no exit load. If you look to debt funds route, mutual funds route, there are in some schemes where there is a limited time frame of you need to hold on to it, and there are some exit loads as well. So depending upon scheme to scheme, I'm not going in details, but there is always a charge on this. you in a direct bond investment, you have an interest payment option. So if you are looking for cash flows for regular intervals, a direct bond instrument makes that possible, that every month, every quarter, you have a regular interest income coming up. Whereas this is not there in debt mutual fund format, unless you opt for a systematic withdrawal plan where you have those kind of features you built into, but then it will erode your principal accordingly. Loan or collaterals are pledgeable. Yes, bonds are pledgeable. It is pledgeable via mutual funds also. You can pledge your debt mutual funds as well. Now, in when you invest into mutual funds via bonds via mutual fund route, there is always a charge, which is expense ratio. It works on various schemes to scheme basis, but anywhere between 0.50 to 2% up to, depending upon which scheme you have invested into, there is always a charge which the AMC levies to the investors. Whereas when you buy direct bonds, there is no expense ratio, there is no additional charge to it. So if I'm, say, hypothetically, if I'm investing into an instrument which gives me 10% interest, and if the AMC charges 50 paisa, 0.50% as an AMC charges or the expense ratios every year, so my net return is 9.5% instead of 10. So getting my point. So when I'm investing into an yield instrument, and if I'm losing that particular yield, it pinches as to the investor. So in direct bonds, you don't have any expense ratio.
So Harit, but do we need to open a separate account, or can we use our existing Demat account? How is it?
So we only suggest to invest into listed bonds. Listed bonds do not, so there is no separate Demat account. Your existing Demat account, you can hold it. Whether you have a Demat account with A broking house or B broking house or C Demat depository participant, it is possible. You have a CDSL Demat, NSDL Demat, doesn't matter. Wherever you hold, you have an existing Demat account, you can use it to invest into bonds. One more thing which has happened in last month, after the budget, from the taxation perspective, which people might be very interested to know, is the indexation benefit which debt mutual funds used to enjoy has been removed. So effective from 1st April 23 onwards, there is no indexation benefit for holding debt mutual funds for more than 3 years. So now it directly implies that your taxation in debt mutual funds is as good as your short-term capital gain tax or your tax as per slab. So we call it the tax slab which you fall into. So whether you hold it debt mutual fund for 1 year, 3 years, or 5 years, there's no indexation benefit. Any capital gains which will accrue, you will have to pay tax as per your tax slab, marginal rate of taxation. Whereas in a direct bond, direct bond interest income is taxable, but you have a possibility of gaining long-term capital gain tax, and if you have a capital gain, the taxation is only flat 10% after 12
in the long-term capital.
Yes, in long term. So you don't have to wait for 3 years first. Long-term LTCG is valid after 365 days. So 12 months is the only validity, and the taxation is flat 10%. Whereas on the contrary, debt mutual fund side, it is as per marginal rate of taxation. So if you're an HNI, you fall into 30% tax slab bracket, you pay 30% tax. Whereas direct bonds, you pay only 10%.
So how do we compare a bond versus an FD? सबसे पहला होता है कि हमें क्या फिक्स्ड रिटर्न मिलेगा? तो आंसर है यस। एक बॉन्ड में भी एक डिफाइंड कूपन होता है, एक डिफाइंड यील्ड होता है। जो रिटर्न आपको मिलेगा वो एक डिफाइंड होता है डे 1 से। अगर आप उसको होल्ड करेंगे मैच्योरिटी तक तो एक एफडी मिलेगा। एक बहुत सिंपल एग्जांपल है, जस्ट एग्जांपल के तौर पे प्लीज डू नॉट कंसीडर दिस एज रिकमेंडेशन। आज अगर आपको बैंक में अगर एफडी करते हैं सो आपको एक रिटर्न मिलता है करीबन 6.5-7%। इसी तरीके से अगर आप एक बॉन्ड में इन्वेस्ट करते हैं तो आपको रिटर्न मिलेगा एनीवेयर बिटवीन, डिपेंडिंग ऑन योर रिस्क एपेटाइट एंड द क्रेडिट रेटिंग दैट यू लुक, इट कैन बी इन द रेंज ऑफ 7 to 8%। सो एक 100 to 150 बेसिस पॉइंट्स का आपको बेनिफिट मिल सकता है एक बॉन्ड में इन्वेस्टमेंट के लिए, बट डिपेंडिंग आप कौन सा कैसे कंपेयर करते हैं। बट कंसिडरिंग अ AAA रेटेड बॉन्ड, एप्पल टू एप्पल कंपैरिजन अगर आप करते हैं तो एक डिफरेंस ये होता है कि बॉन्ड्स में यू कैन हैव अ पॉसिबिलिटी ऑफ अ कैपिटल गेन। दैट मींस दैट इफ यू हैव परचेस्ड अ बॉन्ड, लेट्स अज्यूम एट 8%, सो द प्राइस ऑफ द बॉन्ड इज 100 रुपीज, 100 रुपए में आपने खरीदा है वो बॉन्ड। अगर कल को इसका डिमांड मार्केट में बढ़ गया तो इसका प्राइस जो है वो 100 की जगह पर आप 99 रुपए या 99 रुपीज में भी बेच सकते हैं। right? Through your broker, through us, through anybody. There is no restriction that आपको हमारे through ही बेचना है, हमारे through ही खरीदना है, आप किसी के भी through कर सकते हैं. So there is no lock-in that is there, and there is a possibility of capital gains as well. फिक्स डिपॉजिट में आपने जितना पैसा लगाया है उसके ऊपर जो फिक्स्ड इंटरेस्ट है, यू आर ओनली गोइंग टू कंटिन्यू टू गेट दैट. सो दैट इज द रीजन व्हाई you get a fixed return as well as a possibility of capital gain in bonds and FDs as well. Safety. You can choose whether you want to invest in a secured bond or you want to invest in an unsecured bond. You have the options. Every issuer comes up with multiple times. They come up with issues. You can choose. The same issuer can come up with a secured bond also and an unsecured bond also. So that's why it's very important, like Harit said, that you refer to the information memorandum, the disclosure document. In that it is clearly mentioned. The other objective is all FDs are unsecured. However, if it is with a bank, and we are specifically saying bank FDs are backed by insurance up to 5 lakhs. However, corporate FDs, please do check with them whether it is insured or not insured, because sometimes we end up feeling that corporate FDs are insured. So it is always best to educate and check with the borrower himself, right? When we say secured bonds, these are backed by assets. Various industry has different types of assets, so you can check that security mechanism. The security clause is also mentioned in the information memorandum. Is there a lock-in period? The good part is that listed bonds or bonds which are available on any of the OBB platforms like ours, there is no lock-in period that is linked to these bonds. They are all tradable because these are listed bonds. And the good part is that agar aapne, let's assume that you invested 1 lakh rupee, 10 lakh rupees, and you want to sell some of the bonds. You don't want to sell the full 10 lakh rupees worth bond. Then you have the option that you can sell partially. In FDs, there is a fixed maturity. The day you put in the money till the day that it matures, it's a fixed maturity period. If you withdraw premature, yes, it is possible, but you do get charged penalty. Example, some of the banks charge this way. 5-year bond, 5-year FD will give you a return of say 6%. But let's assume that you sell it after 1 year. So they are not going to just charge you penalty at 1% or anything of that sort. They may end up giving you a rate only of a 1%, 1 year FD. That can be as low as 4 or 5%, depending on the bank and depending on what condition you have done the FD. Linked to that, it depends on what is the premature withdrawal penalty that you have. There are some lock-in FDs also. Please do not. We are not trying to compare that because those are more like tax-saving instruments. So we are not comparing the two. Right? Bonds, whenever you invest in a bond, it will always have the frequency in which you will invest. It can be monthly, quarterly, annual, or cumulative, depending on the choice of bond that you select and depending on the aspect of that bond. That bond may be a monthly or a quarterly. When we say quarterly, means the interest payment frequency is quarterly or monthly. The same way as FD, banks, when you go to a bank, they will tell you whether the FD is monthly, quarterly. So it's almost the same, right? Now, one of the myths that is there is that there is no loan that is possible against the bond, whereas FD, there is a loan possible. Yes, in both cases, there is a loan that is possible. In case of requirement of liquidity, you can avail a loan for the same. Depending on whom you go to, you can go to broker or you can go to NBFC or you can go to your banks, whether depending on the credit, they will decide whether what loan can be given or not, right? Again, in terms of taxation, like Harit said that in FDs, the only thing that you get is interest. There is no scope of capital gain. That means whatever is your tax slab, you will be taxed as per that. If you're in the 30% bracket, you'll be taxed at 30%. If you're in the 20% bracket, you'll be taxed at 20%. It's the same as bonds. There is no difference in that, which is as per your tax slab. The good part is that in bonds, like Harit rightfully pointed out, the long-term capital gain tax comes into picture after 12 months and you will be charged at 10%. So that means that improves your return on a bond. And like we've always seen example or historically, bonds are relatively higher value of returns in compared to comparatively higher than FDs. And the real value of returns or FDs that you get is not able to beat inflation, which is 7%, 6 to 7%, depending. It keeps on changing, but that you can always look at the indexations that are currently available for every year. Right. The good part is about bonds is that you have the option to choose from corporates like Tata, Aditya Birla, any of the bigger names that we all of us know are the biggest conglomerates. Not all of them provide FDs on the corporate side, and FDs are only restricted to banks. So some of the myths that is around fixed income investing is that fixed income, everybody feels that there is no capital appreciation like equity. If you have invested some, you will only get the principal. That's not true. Some of you people have asked questions in the Q&A section as well. So there is a scope of capital appreciation on bonds, depending on the government of India. When GSEC rates go up and down, linked to that, your capital appreciation scope is also there. A 100 rupee bond can trade at 99 rupees and vice versa as well. It's not that there's always a benefit. It depends on the interest rate cycle. However, majority of the individual investors prefer to HTM, which is called hold to maturity, that if I've invested, I want a fixed return for that tenure if you don't want to trade. There are some people who've raised queries also whether is there a scope of capital appreciation. That is the reason why we pointed out that in this slide, that yes, there is. You can sell bonds at premium as well. That means if you bought at 100 rupees, you can sell at 99, 95, depending on the market condition. It is not something like anybody individually decides. It's the market. It's a market-driven activity, right? The second myth is that only aged people can invest in fixed income. That is absolutely not true. Bonds range from a tax-free bond will give you a return of 5.25%. There is no tax irrespective of a tax bracket, and this can, or 5%, and it can go up to as high as 12%. Just one thing that you need to keep in mind is that rates are linked to various factors. That is with reference to the returns that are linked to various factors, which is either the credit rating, the tenure, the amount, the market condition, the industry. All these factors play a very, very important role, and we can get returns as high as 11-12%. If historically, if all of you would see what is the average return that equity has given over a period of time, fixed income is not too far off from that, considering that the risk that you run of principal protection. It is very important to make informed decisions and choose the right bond. Yes. Then fixed income instruments are all the same. Like Harit rightfully pointed out, there are various instruments that are available on the fixed income side. Some bond is 1 year, 2 year, 3 year, 5 year. Some bonds may be a AA or a AA minus or a AAA bond, and A plus or an A rated bond. But whenever you go below BBB minus category, please remember they are called junk bonds.